Hello and welcome to Moneylife. This is Sucheta Dalal. This week, we're going to discuss naturally the exit of RBI Governor Shaktikanta Das, who was retired after one of the longest terms of over 6 years. How did he fare? How did he navigate various crises? And how did he do as far as we, the customers, are concerned? Shaktikanta Das, the 25th Governor of the Reserve Bank of India, completed his term on Monday. In my view, he leaves an impressive legacy of navigating several crises during his 6-year tenure. In fact, he took charge overnight when Urjit Patel, his predecessor, resigned all of a sudden. And the minute he took charge, he was thrust into the hot seat because almost immediately you had this big systemic shock when the 341 company, infrastructure, leasing, and financial services just collapsed. For ordinary people, IL&FS was almost an unknown entity because the main parent company was not even listed. This systemic shock led to a series of bank and finance company collapses. The governor navigated his way through all of this, maintaining systemic stability, but depositors, investors, and customers bore the brunt in these crises. Yes, I think a lot more could have been done. Yet overall, as I wrote in May 2024, and we have a video blog on this, Mr. Das proved himself a tough regulator capable of dealing equally with big influential private banks, non-banking finance companies, politically powerful cooperative banks, which incidentally were brought under the single regulatory ambit of the RBI during his tenure, and there's been no collapse after that. The bank RBI has been tough on them. And of course, he navigated through the merger of public sector banks and the write-off of an enormous 10 lakh crore over the last 10 years. His ability to navigate these situations, deal again with the unprecedented COVID pandemic, keep upstart fintech founders in check. They have this tendency to run to the finance minister and complain if the RBI is a tough regulator, and at the same time facilitate technological transformation. I mean, look at how UPI has done. While, bottom line, manage a harmonious relationship with the finance ministry is really something. And it has won him 2 Best Regulator awards on the global front. This video blog is not about all of this. We have said it before. This one is about Moneylife score concern, which is RBI's attitude to customer issues. Now, here too, Mr. Das, I think, has done better than so many of his predecessors. We at Moneylife have had an opportunity to interact with him as part of Moneylife Foundation's financial literacy and advocacy efforts. We found that he was genuinely interested in addressing customer concerns. In fact, on several occasions, his personal direct intervention after looking at all the facts helped resolve some egregious complaints. He responded to most things that we raised with him with a lot of empathy. In fact, in a couple of cases, of course, things have happened when we filed public interest litigation. One of these was RBI's decision to have an external benchmark for resetting floating interest rates. This was a 2018 PIL filed by us. Here's a link. And the second was setting up the Udgam portal to make it possible to search on a central database if there are any unclaimed deposits that people have forgotten about or which heirs, survivors, claimants could get. This also happened due to a PIL that I filed thanks to the help of senior advocate Prashant Bhushan in the Supreme Court. Now, let's look at simple achievements and missed opportunities. Although Mr. Das was very keen on addressing issues, including unclaimed funds of over 1 lakh crore. You can see he's done a lot right up to his last week. He wanted to end the harassment of know your customer updation processes, but the final outcomes, if you ask me, have fallen short of expectation. To my mind, this happened because every RBI governor is an outsider, and doesn't matter that he's been there for 6 years, he remains an outsider who's unable to finally move the rigid RBI bureaucracy to ensure that there is decisive and logical action. Because RBI does the same thing over and over again, expecting different outcomes, which is to issue directives that don't work. So you have cosmetic mechanisms which dilute customer-friendly reform. Of the 19 odd changes that happened last week, I mean, this was this big bang last week effort to address a lot of things that we had been raising. Not we, many other customers, not us alone. 19 changes were brought to various banking statutes announced by the finance minister in the Lok Sabha. If you ask me, only one of those is really going to work, which is to have four nominees or successive nomination on bank deposits. Here too, the RBI is following what insurance companies, mutual funds, and provident funds have done. So it was simple, straightforward, and this is likely to work. What is disheartening is that Mr. Das set up the Kanungo Committee in 2022. It submitted a report in July 23. This was a customer services, fairly high-powered committee set up after 12 years. It had excellent actionable recommendations, but many of these have remained unimplemented or have been weakened by vague but tough-sounding directives that are routinely ignored by regulatory entities. And this is the story of decades, but RBI's bureaucracy doesn't seem to learn. Let's look at what these Kanungo Committee recommendations are. Now, we all know that periodic KYC updation is the biggest harassment for us bank customers. This is under money laundering laws, but has to be implemented by the RBI. It's a nightmare. It inflicts financial debt and sometimes serious financial losses on upright tax-paying customers, because banks will not even send you the 3 notices that they are supposed to send asking you to update your KYC. You get to know of it when your account is frozen or when your checks bounce and you're embarrassed. If you're a businessman, embarrassed before your customers. Customers across the spectrum have faces. Businesses, individuals, senior citizens, but the worst brunt is borne by vulnerable sections of society who don't get scholarships, who don't get pensions. We've been writing about this. There are video blogs if you would like to see. Now, the Kanungo Committee had made a categorical assertion that regulations simply do not permit the freezing of customer accounts and dishonoring of checks for want of KYC updation. Surely, a committee headed by a deputy governor knows about money laundering laws, and they still made this recommendation. Curiously, this has just gone into a black hole because RBI has not even looked at it. It has allowed banks to continue with this illegal practice of harassment from June 23 to, we are talking about, December 24. Kanungo Committee also wanted a central database linked to a unique customer identifier, the use of video updation. All these were recommendations that Moneylife Foundation has made, and we're really happy with the fact that many of them were accepted, because the Kanungo Committee, first of all, accepted that constantly having to submit the same documents when there is no change is really harassment, and a central database would have ended that. This suggestion also has been ignored. Instead, the RBI updated its master circuit directions on KYC. Believe it or not, for the 15th time since 2016. The 15th one was now in December. What did it say? Treat customers well, don't harass them for KYC. In fact, last month, Moneylife reported that banks use re-KYC to collect additional data from customers to bring them into bank premises needlessly when it could be done on email, registered email and mobile numbers, because they want to sell them other financial products. This is why the self-declaration mandated by RBI is not working. No bank is punished. This is carrying on. Clear solution was for the RBI to issue standard operating procedures. Now, Kanungo Committee ignored the standard operating procedures to be made into RBI's responsibility, said an unregistered Indian Banks Association, which is a bankers club used for lobbying, should do it. They've obviously not done it because banks are not interested in being regulated in a tough manner. So no standard operating procedures. They should have had a definitive list of acceptable identity documents. People are harassed. You need a PAN for getting your pensions and opening an account, but people have been harassed to resubmit it when there is no change in the PAN number. Traceability should be there of the 3 reminders. Now, banks freeze your account, claim that they have sent it. They have a lot of excuses. This has happened innumerable times. It has happened to us at Moneylife Foundation. It needed the RBI governor's intervention to set this right. So he has proof that banks pretend to have sent 3 reminders, but nothing has been done about it. Anything electronic is traceable. RBI knows it. They understand it. They want us to use AI now for mule accounts. They should understand this. There should be easy traceability of 3 reminders to customers. It's all possible with technology. RBI knows this. It wants us to use artificial intelligence for tracing mule accounts, but not for this. And there should be proof of e-verification being put in place, where if there's no change, you have to be able to do your KYC updation through registered email or mobile numbers. Many banks are not allowing it today. They get away with it. That's our point. There is no penalty and no cost to banks who do not bother and who continue to harass customers. Instead of doing all of this, RBI has issued, like I said, the 15th directive, which says accounts opened for deposits or scholarships, direct benefit transfers should not be frozen, and it should facilitate credit. All this should be monitored by a board level customer services committee. How does this help? So it will be credited, but will it be passed on to the customer? If it is passed on, then the KYC becomes meaningless. It fails to address the core issue. The KYC remains a problem because there is a mismatch of KYC data on various identifiers. The manner in which your names and details are written on Aadhaar cards, job cards, PAN cards, voter cards, school leaving certificate is different. When they forced you to get your Aadhaar, none of this was matched. 10 years later, this is coming up and people are being harassed. So what RBI has said in its notification is not a solution, but there it is. Instead, exhorting banks to improve KYC processes without a clear formal system of rectifying data is really pointless. Legacy issues have to be addressed. RBI knows this is a Herculean task. So another directive and say, please do this or that, it's not going to work. Is it any surprise then that many other very sensible recommendations of the Kanungo Committee have been ignored? The Kanungo Committee said in bureaucratic language, they said you should have incentives and disincentives and regulatory cost, which to my mind is penalties and punishments for deficient customer service. It's been ignored even now. Remember, July 23 to December, RBI has had plenty of time. They do not want to do it. That's why it's been ignored. As long as RBI remains reluctant to punish banks for needless KYC-related harassment, they can have 100 directives. It's not going to make a difference. Now, let's look at other examples where this has happened. RBI launched an internal ombudsman scheme during rockstar Dr. Raghuram Rajan's tenure. It is not functioning efficiently. I'm not saying it, Kanungo Committee said it. In fact, it provided data to say customer complaints were rising and 25% of complaints were not even referred to the internal ombudsman. Scrap the damn thing. It's not going to work. The Kanungo Committee, more polite language, said, get the banking ombudsman empowered to take a class action approach and direct corrective action. So there are lots of complaints of the same kind. Instead of it going individually, the banking ombudsman has an overall picture on all of this. They said there should be an agnostic portal to lodge the complaints, common portal. This is already there in RBI's complaint management system. So think of how much RBI can improve its efficiency. The banking ombudsman at a central level can look at complaints on the CMS, which was set up in 2019, 5 years ago. If there is a pattern and there are lots of complaints of a particular type or from a particular bank or a particular finance company, then take class action. And if this is not addressed as a class after one warning, punish those organizations so that they do not harass customers. Easy to do. Plenty of time for them to think about when they talked about 19 amendments. It has not been done. Instead, customers often allege that the banking ombudsman simply closes complaints based on technicalities or only after hearing regulated entities, because they're constantly in touch with regulated entities and almost never talk to customers. Now, let's look at the other big thing that they did, which is unclaimed funds and inoperative accounts. Any of you who are followers of Moneylife know that we have been raising this issue incessantly. RBI last week asked banks to urgently reduce the number of inoperative accounts because they finally acknowledged that there is 1 lakh crore of people's money. Most of it may be tax paid that is stuck in inoperative or, in fact, even more in dormant accounts, right? So RBI, after our public interest litigation, set up the Udgam portal where you're supposed to be able to search whether there is money left by a deceased loved one, if you're a survivor or an heir, or you yourself have forgotten about a deposit. Now, we told the RBI governor in an interaction that this Udgam portal is completely unsearchable. Mr. Harsh Rungta brought this to our notice. The governor assured us it would be addressed. I don't think it's happened because our entire government unleashes harassment on us because they are focused on probably fraud that will be 1% or less. Fraud can be tackled in multiple ways, including in insurance. The insurance industry also runs on this basis. But no, RBI said generate a unique UDRN, unclaimed deposit reference number, for each unclaimed deposit, so that third parties are prevented from identifying the account holder and the bank branch. Finally, what is it that you want to do? You want to return money or reunite money with the rightful owner, isn't it? Why will you create another bureaucracy? Have you tested it out? No. It has just been announced in the last week, and it'll be another 6 to 8 months, giving the RBI more time, almost 2 years after the Kanungo committee, to put in place anything sensible and workable. It remains to be seen whether this has any significant impact. To my mind, it won't. Several other recommendations that have been buried. An important one, if you are a borrower, you'll know that, and this applies to SMEs, large industry, and individuals who take home loans. They collect your original documents. If you're unlucky, they lose either all the documents or some crucial documents, and that impairs the asset permanently. We have taken this up. We took it up with the governor. In one case, the Kanungo committee took note of it, and they said that banks or lenders should be made responsible for the loss of original documents held as collateral. They must compensate customers and help rectify them by getting all the true copy notarized and whatever with whichever is the official agency. It is their job. They lost it. An individual ends up running around for too long a time to fix it. This has been completely ignored. What does all this show? It shows that despite a 6-year-long tenure and a genuine interest in improving customer services, Mr. Das struggled to overcome the entrenched institutional inertia that is prevalent in this ivory tower in Mumbai called the Reserve Bank of India. It harms bank customers. This job is now transferred to his successor, Sanjay Malhotra. He is an IIT graduate in computer science, and has a lot of goodwill. Hopefully, he will be able to cut through this and understand how tech can be used sensibly for the benefit of customers, and cut through all the bureaucracy that says you cannot have long-term reforms. We're keeping our fingers crossed that this happens. But as history shows, empathy for customers has rarely been a key result area for RBI governors. Their relationship with the finance ministry and how they manage interest rates is more important, actually less important to us as individuals. In fact, for your knowledge, before Mr. Das, the last governor who championed customer issues was Y.V. Reddy. His tenure ended in 2008. We are in 2024. I must say Mr. Das did a lot more than Mr. Reddy. The baton now passes to Mr. Malhotra, who must rise to the challenge of aligning RBI's priorities with the needs of millions and millions of consumers who are treated so callously and left to fend for themselves by India's banking system. Thank you so much. If you like this, please share this video, because this is about all of us and we need people to be aware of it.